Good morning, good morning, good morning, good morning, good morning, guys. My name is Sean Dex, and I welcome you back to the Mango Grow for your daily Bitcoin and market analysis. My oh my, what a couple of days. Markets maybe, just maybe, overreacting a tad bit to that FOMC meeting. Bitcoin definitely interesting at this juncture. We'll be talking about all of that today and then some. As you guys can see, we also have Ethereum on our dashboard volatility analysis today. So let's go ahead and get started. We have Bitcoin sitting long on the dashboard. It's been long for 24 days now, right? But I've not been all that excited for the longest time, pun intended. Why? Because the volatility profile hasn't been all that interesting, right? The vol on the dashboard was sitting at 75 to like 90 for the longest time in the red region, right? I should write that down in red. It was 75 to 90, scary vol. But now we've crushed back down to 11. Now Bitcoin is interesting again because, guys, we have resistance overhead. Yes, I've been talking about resistance overhead for the longest time. Be careful, be careful, be careful. But now we have resistance overhead while vol has gone down, right? Volatility has gone down with an uptrend on the mid to low time frames. Remember, the dashboard is long on the daily, long on the 12-hour, and long on the 4-hour as well. So you have low volatility with an uptrend against resistance. That's exactly what you want to see, because if you have the uptrend, you can use that uptrend to shape your bias, or rather to guide your bias for a break of the resistance, because uptrends break resistance, downtrends break support. That's how you can keep your trading very, very simple, right? And that's the idea even between support and resistance, right? If you have a higher time frame downtrend, you can always count on resistance holding and eventually look for that support to break, causing your bear flag. And it's a flip side to your bull flags, right? So yeah, let's go ahead and erase all of that. Boom, boom, boom. We are done with that. So the reason I'm liking Bitcoin over here now is because we do have that compressed volatility with the uptrend and that resistance, that weekly resistance, which, by the way, lined up with our target move of our cascading pattern, is now under threat of breaking to the upside, right? It's under threat of flipping from resistance into support, because as soon as we start seeing candles close above this level over here, guys, that's when this resistance turns into support. That's going to be huge, because then we have a vacuum move all the way to around $30,000 to $32,000. That's when Bitcoin is going to get super, super interesting, super, super exciting. And that's also when we can start looking for our eventual target too, which is sitting at around $48,000, right? $48,000 to $50,000. But let's go ahead and do a quick review of our cascading pattern. I want to emphasize that yes, we have hit our target one, but we do have resistance overhead still. So don't get too excited yet. Things are looking good. Things are looking better for the next leg to the upside, but we have to see this resistance level break. Okay, let's go ahead and talk about our CP, our cascading pattern right over here. And the reason I want to do a review of this is because, one, many of you might be new here, and two, this is extremely educational and useful for you guys to use in your future trade opportunities as well. I've been using this for years now, for years. Those of you who remember, we used it back in 2021 as well, right? When Bitcoin bounced from around 30K all the way to 60K, right? Same idea, same trade. And now we are seeing it unfold again over here at around 17K, possibly all the way up to 42K. Our initial target was 24K, or rather our first target was around 24K, right? So let's explain the idea of the pattern. The pattern is essentially your falling channel that everyone expects to break to the upside, right? As simple as that. That's your pattern trade. But the channel instead breaks down. Everyone exits their trade. But that exit ends up being a liquidity draw. And that liquidity draw ends up breaking back into the channel, back above the channel, and then meeting its measured move, right? That's exactly what we saw over here. We had a falling channel. Everyone expected to break to the upside, broke down. Then we had a ascending triangle accumulation. That ascending triangle had its measured move pointing to the top of the channel right over here, broke to the top of the channel, and then had its measured move off the channel. So this cascading pattern target has already met out, right? We've already met the target. However, we have another target. The cascading pattern was only a component of our larger equilibrium trade based on the Ichimoku, right? Right over here, you guys can see our Ichimoku. We had our Tenkin right over here, our Kijun right over here, and our top of the cloud right over there coming at around 42,000. When we were talking about this cascading pattern play into the equilibrium play, the Kijun was sitting all the way back over here, guys, at around 48,000. And we talked about how we'd be looking for the Kijun to start drifting towards price with the Tenkin chasing price, right? Everything's going according to plan, but the equilibrium play is not done just yet. The equilibrium play is only done when we see price snap back towards the cloud all the way at around $42,000. We don't have that just yet. We also have the 200 moving average right overhead, right over here. So not only do we have that weekly resistance coming in from these candle closes over here, but we also have the weekly 200 moving average coming overhead. So we have a lot to overcome. If we can start seeing price start closing candles above this region over here, it's going to line up with the next leg towards the upside. It's going to line up with the C-span trade getting completed. It's going to line up with the equilibrium play to the top of the cloud. It's going to line up with our Fibonacci level right over here too. So there's going to be a lot of confluence coming in on that trade, but we don't have it just yet. We have to first wait for this massive resistance to break, but things are looking good. Why? Because now the wall on the dashboard is compressing. Why? Because on the dashboard, I showed this to you guys a few days ago, we got our weekly long trend, right? We don't have it showing right over here because this is the daily time frames, but the weekly on the dashboard has flipped long. It flipped long only around 4 to 5 days ago, and it had stayed short for 300 days. 300 days. You would have avoided the entirety of the bear market had you followed that short call. Now it has flipped long. Do we want to avoid the entirety of the bull market? No, I don't think so. Now, by all means, that can actually flip back into neutral and then back into short, but it hasn't done so yet, right? And these are objective triggers that we can use to stay on the right side of the market, and that's what Mango is about. It's about staying objective. It's about using price to risk manage in both directions, towards the downside and towards the upside, because there is risk to the upside. There is risk on missing out on a massive bull run, even if that bull run isn't a parabolic bull run, right? No one over here at Mango is calling for a move all the way up to 200,000. We are saying that, hey, there is an intermediate bull run that could have a pullback, and then we could get the massive parabolic bull run in the months and maybe years to come, right? But at the moment, we saw the cascading pattern play over here. We saw the ascending triangle. We saw that leg to the upside, and everyone was too stuck in that bear mindset. Rightfully so. But you cannot get too stuck in that. Because markets ebb and flow. And while macro conditions may still long-term be bearish and we may have the down move, you cannot miss out on this move. This move is where you can collect a lot of your favorite coin, whether it be BTC, whether it be Ethereum, whether it be Cardano, whether it be Solana. You can collect. And then when the bull market does come, everything that you collected, maybe you 2x your account, well, the bull market will 10x it for you. So now is the time to be putting in the effort. Now is the time to be learning if you haven't yet. Do not wait for the parabolic run, guys, because things will happen so fast. Do you guys remember this? Remember this run over here when Bitcoin went from around 20K to 60K? It happened all so fast, right? You did not have the time. But during these longer consolidation phases, you have the time to not only accumulate, but also to learn while the market is moving in an ebb and flow manner, right? So all of this is to say, control those bear tendencies, but control those bull tendencies as well. Don't get too bullish, don't get too bearish. That's where Mango is sitting at, right? There's a spectrum of bullishness and bearishness, right? At the moment, you don't want to be sitting over here, you don't want to be sitting over here either. Let's say you want to be sitting somewhere between 4 and then alternate to 6 and then go back to 4 and then back to 6. That's how you trade this zone of the market, guys. You don't want to get too bullish, don't want to get too bearish. At the moment, we're sitting at weekly 200. We're sitting at more resistance, actually. Let me go ahead and show this to you guys. this is where things get really, really interesting. As you guys can see over here, I have 3 EMAs, right? The yellow, which is your 21, the green, which is your 55 EMA, and the purple, which is your 200. Okay, what are we seeing over here? Well, we are looking at the combination of how all of these EMAs are interacting with each other. The green 55 is coming in to kiss with the 200, right? Well, if this 200 and green 50 cross like this, that's your death cross, right? That's your EMA death cross. And I like to use the EMA death cross because they place greater importance on recent price action. And you're going to see why this is really, really important. But if you guys haven't watched my SMA versus EMA vid, make sure you do. Okay, I've done a dedicated video on SMAs versus EMAs. There's some golden nuggets in there. You'll get a better understanding of the importance of EMAs and the importance of SMAs too, right? EMAs work, in my opinion, better in crypto, provided you understand what exactly they are doing. As you guys can see over here, the green 55 has been coming down to meet the purple 200 exponential moving average, right? When the green 55 crosses underneath the purple 200 exponential moving average, that is considered to be a death cross. And we have never ever seen a weekly death cross on Bitcoin, ever, right? If this happens, that's going to be the first time it is happening. And an important cross like that is usually defended or tested by the market, right? Defended or tested. Those are the keywords. Defended or tested. What do I mean by this? Well, a test is when price goes up there, tests it and get rejected, right? We saw something like this on the TK cross over here with Bitcoin leading into the bear market, right? If you guys do remember, those of you who are following Mango back over here, we said, hey, we are at the bottom of the cloud. We're likely going to see the test or the defense of the TK, right? And what Bitcoin does over here is going to be really, really important. If we close above the TK, by the way, when I say TK, I'm referring to the Tenkin and the Kijun. The blue line is the Tenkin, the red line is the Kijun, right? We said if Bitcoin can claim the TK, if it can start closing candles above the Tenkin and the Kijun, that's going to be good. And then we can look for the next leg up. If Bitcoin doesn't do that, well, that is a failed defense of the bearish TK cross, and we can look for the next leg down, right? Well, similar freaking story over here, guys. Similar story. Can Bitcoin close above this dead cross, this DC, right? Can Bitcoin defend the DC, or is Bitcoin going to get disconnected and look for the next leg to the downside? That's how you can look at this, right? Now, look at how the EMAs have been reacting, right? Because it's an EMA, because it places more weight on most recent price action, you are seeing it flatten out. You're seeing it flatten out as price moves up. If we can start seeing multiple candles close above here, we may not see that cross at all, which is going to be surprising because I really thought that was going to cross. Or at worst, provided Bitcoin can close multiple candles above there, we are going to see the green 55 kind of cross the purple and then uncross, right? Kind of like a fake cross that we talked about on Dixie, which, by the way, has been on its downtrend ever since we talked about that chart. But we'll get back to that next week. For now, this is what I want you guys to focus on, right? Look at the 200 exponential moving average, the green 55 exponential average. Watch for that death cross and watch for how price reacts around it. Does price go and start living above it? That's going to be a really, really good sign. That's when we can start looking for that extra confidence for that move to around $42,000. Until then, I'll be a little bit more on the defensive side. Position for bullishness, but be cautious about it, right? Be cautious about it because, hey, resistance may smack price back down. Another really, really good sign, guys, is the slope of the 21 EMA over here, right? We talked about the green 55, we talked about the purple 200 exponential, but we have not yet talked about the 21 EMA, the yellow 21 EMA. And what's really, really important over here, guys, is the slope, right? For the longest time, the slope has been downwards, right? It was angling downwards, but now you're seeing it flip towards the upside. A lot of traders are slope traders. They look at the slope of the 21 EMA and they're like, hey, that's enough for me to start putting on long positions because that's indicating that momentum is to the upside, right? Look at the bull market over here. Momentum started moving up and price went up. So that's a really good sign too. What we'd want to see now is the 21 EMA start living above the green 55 and the 200 exponential moving average. Once you see that, that's going to add further bullishness to the higher time frame. Right, so to quickly summarize, we do have weekly resistance on the higher time frames, but as per the dashboard, the lower to mid time frames are setting up with the perfect trend and volatility profile to give us that bull flag for the next leg towards the upside, right? But watch for price around this region, guys. Watch for this death cross on Bitcoin. Speaking of the dead cross, I do want to quickly note that the Dixie dead cross that we talked about a month ago, okay, a month ago was the precursor, was our initial clue that, hey, we might be getting this bull run on Bitcoin, right? It might be setting up. Dixie might be the leading indicator, and we'll revisit that next week, right? It might be the leading indicator that gives us that first leg of the Bitcoin macro bull run, right? However, Dixie has been on a downtrend for a while now. Since we talked about it, Dixie has been going down and down and down and down. So that forecast has played out, but that forecast now is a bit overextended, in my opinion. Dixie is begging for a mini bounce. Dixie is begging for a mini bounce while Bitcoin is coming up against this massive weekly resistance, right? So you're seeing Dixie kind of screaming for a bounce while Bitcoin is up against resistance. Look at how the fundamentals and the TA are all lining up. That's not a coincidence, by the way, but it's something to keep at the back of your mind. If Dixie sees the bounce, it's going to line up with Bitcoin smashing up against resistance. If Dixie sees further continuation, it might line up with Bitcoin putting in a bull flag and breaking to the upside, potentially taking us to that $32,000 move. Man, there's so much I want to talk about. Let's go back up to the dashboard really quickly. I do want to talk about Ethereum. We just talked about how if Bitcoin breaks that resistance overhead, we may see that next leg to the upside, right? Well, in that case, guys, I am going to get really interested in Ethereum. Ethereum flipped long 8 days ago, right? More than a week ago, but it's not done all that much, right? Compared to other coins, Ethereum hasn't done all that much. Look at BTC, and you can see that the trend has been short for 16 days, right? 16 days, and it's actually up 5%. Okay, so what this row over here is telling you, right? It's telling you that had you put on the short trade on BTC, you would have been up 5%. Another way to read that is saying that, hey, you have essentially underperformed Bitcoin had you stayed on the Ethereum trade versus Bitcoin, right? So if you bought spot Ethereum, you have underperformed Bitcoin, okay? But I honestly think that this is going to turn around, right? If we see Bitcoin break that weekly resistance and go up to $32,000, at around the $32,000 mark, if Ethereum is still sitting at an underperformance zone against Bitcoin, I'm going to start watching to see what the low caps to the mid caps are doing on the altcoins. Because at the moment, guys, the low caps are just going absolutely insane. All right, so yeah, man, guys, there's so much we have to talk about. But I don't think we have time to talk about this today. I may have to leave this for the Sunday video or for the Monday video. Maybe I'll touch on this just a tad bit, right? I did want to talk about the happenings of the FOMC meeting. As we know, JPOC came out and announced a 25 basis points hike, and that was expected, right? That was expected. We talked about that leading into the meeting. The market was pricing in a 99% probability of a 25 basis points hike. But we also talked about how JPOC has two tools at his disposal, right? He has the rate hike, right, which is the more immediate action that he'll be taking on the market. And then he also has forward guidance, right? Forward guidance is essentially his speech at the press conference, right? What he says there, how he basically tames the market with his words, right? That's how he can control the over eagerness or the over bearishness of the market. And during his speech, he surprised a lot of people. A lot of people, including me, expected him to come out and be a lot more hawkish, right? By hawkish, we essentially mean that we expected him to be a lot more stern. We expected him to say things that would keep the markets at bay, to keep the markets either down or flat. But he came out and surprised. Okay, I'll put it this way. He made sure not to say anything that was too bullish, or the word that you want to use is dovish. All right, guys? Dovish is the word for anything that he says that is considered easing of the market, okay? And easing of the market is considered bullish, right? So he wasn't being dovish. He came out and ensured that he wasn't being dovish with his words, but it was very apparent that he wasn't being hawkish either. So on one hand, he made sure he wasn't sounding too dovish so the markets don't go out of control. But on the other hand, he made it a point to not sound too hawkish, which is a very, very big shift from how he was messaging in the past months or so. And I found that really, really surprising, very surprising. He was given enough opportunity and he was posed with enough questions to smack the markets down, right? There was one point where this lady asked him, hey, is there any chance? Okay, so let me put it into context for you guys, okay? At the moment, the markets right here, you guys can see this is the future expected path of the Fed funds rate, right? And you can see that it's going downwards, right? We're sitting over here, right, at around 4.75 basis points and 4.75%. And the market is expecting the Fed to go down over the next months. So one of the questions asked to him was, hey, is there a possibility that instead of you going flat and then down, is there a possibility that you guys go flat, pause, and then go up, right? This was his opportunity, in my opinion, for him to say, yeah, of course. He could have answered with sternness. He could have answered with a little bit more vigor and said, yeah, why not? Why the hell not? He could have said this. He could have said, if inflation doesn't come under control, we will keep raising until the job is done. Honestly, in my opinion, had he just said that, we will keep going until the job is done, on that one question, I think the markets wouldn't have reacted the way they did. But he was really, really soft on that answer. And because it's not like Jay Powell doesn't know how to be hawkish, right? We have seen him hawkish over the past few months, and he has done a really, really good job. This time, this meeting, it was like he was deliberately being, I don't want to say dovish, but he was staying away from being hawkish. He was deliberately making sure that he didn't sound too hawkish. So that was really, really interesting. And the markets looked at the lack of hawkishness as bullishness, right? They looked at the lack of hawkishness as dovishness. Because of why? You guys might be asking. And you guys might be asking why. Why is the lack of hawkishness dovishness? It's because of relative expectations. Relative to what the market thought he was going to do, he ended up being dovish, right? They expected him to sound hawkish on his forward guidance, but he didn't. So that was considered dovishness because the market had priced in a forward guidance of hawkishness. As soon as the market did not get a forward guidance of hawkishness, well, they then had to unprice the hawkishness, right? Which is why the markets rallied. And people expecting the unpricing of the hawkishness ended up also joining in on the momentum trades, and we saw the markets go up. I honestly would not get too excited away, guys. I want to see the market settle over here for a bit. I want to see those resistance levels on Bitcoin get claimed. And yeah, again, over here you guys can see that for the next meeting, this year is the next meeting that the market is pricing in a 17% chance of a 0 basis points hike. So now we have the market saying that, hey, there's almost a 20% chance that Jay Powell does not raise rates at all next month, right? The meeting coming up in around 6 weeks, I believe, right? So yeah, 80% chance for another rate hike of only 25 basis points, but a 20% chance of a 0 basis points hike. So the market basically thinks that the Fed is done, right? The Fed is done. So let's go back to this chart over here where we can see what the market is pricing in for future rates. So right over here, you guys can see that we are sitting at around 450 to 475 basis points, and leading into 2024, let's go ahead and mark out 2024. That's somewhere around here, right here. Okay, so at the moment this is 2023, right? And leading into March 2024, which is this area right over here, this is the 3-month average, right? 3-month average. So between March 2023 and March 2024, over the next 12 months, the market is expecting rate cuts. Okay, the market is expecting a drop in interest rates over the next 12 months. But Jay Powell was very, very specific in saying that, hey, we aren't looking to cut, right? In fact, the way things are going, we are actually looking to raise to around 5% interest rates and then stay flat for the rest of the year. But the market doesn't seem to believe him. The market thinks that he's either going to have to cut because of a recession coming, or he is going to have to cut because we're getting a soft landing. We discussed this in further detail in the previous video. I definitely recommend checking out the previous video. You guys are going to learn a lot. So yeah, at the moment there is a deviation what Jay Powell is saying and what the market thinks, right? What if we actually end up getting this? What if the reality ends up being this, right? And we end up having a bigger deviation. This could actually line up with what we're talking about on our bigger trade on Bitcoin, with the red cloud indicating that we may actually get a move that somewhere around here to our target levels above the cloud, and then a pullback, right? If the market begins to realize that, wait a minute, J-Pow is actually serious about this and he may not be decreasing interest rates, they may end up being surprised. We may end up getting a bigger pullback. So we got to keep that at the back of mind. So until the cloud actually flips green, don't get too excited. If the cloud flips green, it's going to line up with a lot that you're seeing in the fundamentals as well. TA is always king. I hope you guys enjoyed this video. I hope you guys enjoy your weekend. It's Friday. I'm tired. I'm going to go enjoy my night. I'll see you guys in the next one. Ciao.